Hey, welcome back to another episode of the Multifamily Masterclass. I'm Bart Deal, and today I'm joined by two amazing guests, as always, Heidi Butler and Jameson Manwaring. Today we got some exciting topics, especially being post-election. The first topic we're going to get into is talking about Trump winning the election and what this means for the economy and also for housing. The second thing we'll get into is we're going to talk about thoughts on the stock market moving forward. Then we're going to talk about a city within a city. And then lastly, we're going to tell you guys about what popular REITs have to say about rent growth for the next 3 to 4 years. But first, let's kick it off with this. Trump won the election, everyone's favorite topic, politics. What do you guys think this means for our economy?
Well, the first thing is that the headline is that we have a new president, but it also is important to see what happens in Congress, in the Senate, in the House. It looks like the Republicans will now take over the Senate. They've been in the minority for the past administration. The House is going to be a little bit closer, and as we're sitting here, it's still election week, so some of those results are still coming in. But it'll either be very close, or one party will have a slight majority, but it won't be a vast majority in the House. So there'll still be some restrictions in place. There'll likely be some dissenting voices if the administration's trying to get a bill through. It's not going to necessarily be easy. Mm-hmm. And so there's a lot of things that happened in this election. Obviously, the president was the big headline. I think one of the big takeaways for me is I'm glad that we know who the president was basically Wednesday morning, the next day. The last two cycles, it's gone on throughout the week, and it's good to have some clarification. And I also think it's good that the trend was kind of across the board, that his campaign won in all of the 7 swing states, not just a few. Yeah. So there's a little bit of a clear mandate as to what the government is supposed to do and what the citizens want the government to do. So I think that was a big plus in this year's election. And the market has been up all week, the stock market, which is what we see. Yeah. Generally speaking, the market's always viewed Trump when he ran before and now as being very favorable to markets. And that as you dig into that a bit more, the tax cuts are likely to come in. He's talked about a corporate tax cut, less regulation. The Biden administration has been pretty restrictive when it comes to regulations with mergers and acquisitions, with the SEC. There's a lot of people on both sides of the aisle that are pretty happy there's going to be some new people coming in the SEC. Mark Cuban's one of them, who was, supported Harris, but knew we needed to change in the SEC. Crypto is a big part of the SEC changes, opening that up and being making the U.S. more of the capital for crypto. So there's a lot of things that are positive when it comes to a new change in the administration economically. I think one of the things people don't see is that we're seeing is that interest rates have actually gone up. Mm-hmm. And that's the 10-year Treasury, which is what we watch closely. That's where most of the debt that we put on our projects is tied to the 10-year Treasury. And that started going up a few weeks before the election as it looked like he was going to win. And then since he won, it's ticked up even more. And a lot of the people who were big supporters of Trump felt like him coming in, interest rates would go down, it would open some things up. We're still obviously really early, yeah. But the reality is that because they think the market thinks the economy is probably going to be stronger under a Trump administration, that the Fed doesn't have to lower rates as much to ignite the economy. So they're expecting rates to stay higher. And the other side of it is there could be an uptick in inflation if tariffs that he's proposing go through. And if there is an uptick in inflation, rates would have to stay high to offset that. So That's what the market is already thinking. So Definitely a positive change in the eyes of the market, but there's two sides to every story on this, and we're still very early. But I am also excited just about a change. I think people, we were ready for a change, a fresh start, and that's going to be. It's always good when the president is a real estate developer. Being in a real estate investment company, that's probably a good thing for us.
So obviously when we have a change in administration from one party to another, do you feel like we're going to be spending the next 4 years do you think President Trump will be spending the next 4 years trying to backtrack a lot of what President Biden has done? Or do you think he's going to be, maybe spending a little bit of time on it, but really just pushing what he wants to get done over the next 4 years?
A lot of that change just happens naturally because he brings in a new cabinet, and the cabinet is who really regulates a lot of the different departments. So when he brings in a new cabinet, that change is going to happen immediately. And then one thing about Trump is he gets to work quickly.
Yeah.
And he is not a passive executive.
I don't think anyone's ever accused him of being passive in his entire life.
So he has a lot of things that has been promised on his first day or his first month, including ending a bunch of wars around the world. So he's going to be busy in the first 60 days. All that stuff will be rolled back, and then he'll have the rest of the 4 years to move forward.
And his path to being able to accomplish the things he's promised looks like it's going to be easier if he does get the House and the Senate as well, which it seems like it's going to be that case. Overall takeaways, I think this is going to be a really positive thing for our country. I think it's, we need some change right now. And I think it's better that there's the House, the Senate, and everything is going to be leaning in one direction to accomplish more things.
Yeah, and I think that there's, we have a divided country, 50-50.
Yeah. And
we have investors and residents and employees on both sides of the who voted for both candidates. And but I think the good thing is we have a strong system. Things are going to work out, and even if you didn't vote for the current president, I think most people are saying, I hope things work out. I hope things go well. Get behind it. The will of the people is pretty clear, and if nothing else, we can get behind that and have confidence that a lot of people wanted to move this direction within our country.
Well, and I think everyone wants to see a good market, a good economy. I think that's something we can all agree on. And with Trump's plan, if we move forward and it turns out to be positive, I think we're going to have happy people no matter what.
Well, I want to pivot to housing. So obviously Trump winning this election means a lot for the real estate market, for housing. He kind of ran his entire housing campaign on three things: cutting regulations, pressuring the Fed to lower interest rates, and cutting down illegal immigration. So the first thing I want to talk about is regulations. So Trump has called for slashing regulations and permit requirements that home builders say add unnecessary cost to new homes. He said the regulations alone cost about 30% of a new home. So what are your guys' thoughts on this?
Yeah, that's a big positive if we can get more streamlined rules and regulations for developers, for builders. A lot of that is at the local level. It's at the state level. It's at the city level. Anybody who's added a bathroom to their house or added enclosed a patio into a sunroom knows that going through that process with the city, and even since COVID, has gotten even worse. Mm-hmm. It used to be where you could go meet with the city and they would lay things out all together, and you'd have the several different departments, and in one meeting you'd really get a lot of progress. And now it seems like everything's done over email, and there's so much back and forth. So there's a lot of frustration right now from builders and developers and regular just any property owner who's trying to do something. But it's more at the state and local level, so hopefully that trickles down. And always for ways that we could streamline that process to make it easier to, get a home out of the ground to build. So we'll see what he can do at the federal level.
And anytime you can remove unnecessary costs, I know just even working with Country Club, the amount of times that things were sent to one apartment and it would take weeks before we could get it to the next apartment, then get sent back to the original. I mean, it's not clean. It takes time. It takes a lot of resources from the state level to accomplish something that if we could get people in a room 3 times, we could get it all figured out for sure.
Yeah, so to sum it all up, by cutting regulations, in theory, it should cut the overall cost of development and potentially building new homes. The second thing he talks about is he wants to pressure the Fed to lower interest rates. And he says reducing mortgage rates is a big factor. We're going to get them to back down. We think 3%, maybe even lower than that, saving the average home buyer thousands of dollars per year. I felt like when I was saying that, I wanted to imitate Donald Trump.
Did he say that recently, or is that an old quote?
That's pretty recently.
Yeah, this one is definitely a bit more controversial. One of the things an executive needs to do is set the vision. So that's important that he's putting that out there. Even the first one that we talked about, less rules and regulations, set the vision. A lot of it's not in his hands. When you get down to the state, local level, president can't do much more there than set the vision and maybe put a little pressure on people that we need to make it easier. This one there's some clear, distinct powers that the Fed has that have nothing to do with the president. In fact, Jerome Powell yesterday was asked about this, that if he was asked to resign before the end of his term at the end of 2026, if he would do that, and he said no, he would not. So it's pretty clear that the President Trump could not have him leave before the end of 2026. So we have 2 more full years. He is the one who appointed him in the first place, and he does like to move people around. Just because he appoints someone, says they're going to be great, doesn't mean he's going to keep them there for very long. We've seen that. And so that's how he has felt about Powell. But there's not a lot he can do when it comes to interest rates that's in his hands. It's really in the Fed's hands. And we've actually seen interest rates grow up since it was clear he was going to be elected. So I'm glad he's putting that out there. And what I don't want to see, as pretty centrist person and supportive of the new guy coming in, I don't want to see a lot of chaos. Yeah. I think he needs to let the Fed do his thing, and he can say whatever he wants to say. But I hope there isn't some sort of power struggle, and that there are bounds to what he can do.
Great. Well, the next topic I want to talk about is Trump's mentioned cutting illegal immigration and how that will make housing much more affordable, stating that illegal immigrants fill up units that could be occupied by everyday Americans. What are your guys' thoughts on that? Do you guys tend to agree, disagree?
Well, it's all supply and demand. Yeah. So if there's going to be less supply of people living in apartments, there is in the last 4 years, roughly 8 million people who are here, whether they're here legally as asylum seekers or not legally. As a landlord, we don't ask that question. In fact, we can't ask that question. We have ways that we have to verify who the person is, but we can't ask if they're here legally or not legally for housing. So, we'll see what happens with that. There's been attempts in the past by the government to have deportations and have people leave. Most of that's been successful is when they don't let employers hire people. They clamp down on employers, and if people can't get income and jobs here, we saw that in Arizona. It's about 10 years ago. The law that came in where it was E-Verify. You had to verify everyone who was working for you and their status, and that was a state law. And a lot of people left Arizona of their own free will. I have friends in Mexico who left who were not here legally, and they actually work for me now in Mexico. They've stayed in Mexico, and they left Arizona at that time because of that policy. So there are things the government can definitely do to dissuade people from staying here if they're not here legally. And I think the other important point is there have been a lot of people who have come here who are asylum seekers, and they are here legally. So the people in Springfield, Missouri, the Haitians, that there's about 50,000 Haitians that are there, they're all here legally. They came here as asylum seekers because Haiti is a mess right now. It's basically in a civil war. So they were able to come to the U.S. as asylum seekers, and unless those laws get changed, going forward, we'll still have asylum seekers. Those are the same people who come over into Florida from Cuba on boats. Once they get here, they can seek asylum. And so there's a lot of people from Venezuela, this is what we see in Arizona. We have a lot of people from Venezuela, not so much from Haiti, but Venezuela's had a mass out-migration of people because of all the problems there, and they all want to get to the U.S. As one of the main best landing spots, and many of them are here legally because they're seeking asylum. They're going through that asylum process. So there's also some here we know that are not here legally, and we'll see if some of the restrictions that they can put in place will lower that. I think it's pretty clear they're going to try to do that.
I want to know, do you think he'll re-implement the E-Verify or put that across the nation, not just in Arizona? What are your thoughts
That's
about
kind
that?
of what they're saying is, E-Verify was specific to Arizona,
Sure.
so I'm sure it would be much, it would be at a constructed differently, but it did work well here, and it was also very controversial. I will say, but it did, as being a border state, it's something people here are much more concerned about, and it would impact housing here to some degree. I don't know to what level.
Yeah.
We do see a lot of illegal immigrants who are construction workers or work in the construction fields as 1099, as employees. So I imagine that will affect the housing market as far as construction goes. Do you think it will have a major impact, or will it be minor enough we can get through it?
Yeah, I don't know. There would probably be an impact to labor,
Sure.
construction labor, but I think that's part of what the government's saying is we don't want people working here illegally. Mm-hmm. And if that comes down, then that might increase wages of people who are here. But I think construction right now, we're going into a phase where construction is already really depleted. Projects aren't getting planned because of the cost of capital and because of the cost of materials, and that could add cost to labor. But I think they're saying they're okay with that increased cost if you're paying somebody who is here legally, and you can't really pay folks to work for you who are illegal. It's not. It's has to be done under the table.
Sure.
I'm sure there's some of that's going on, but big construction companies they're not able to do that already.
Right.
The next topic I want to dive into is something that we talked about on our quarterly live stream recently, but I know Jameson wants to shed a little bit more light on it. But there's an article by CNBC. Goldman projects just a 3% S&P 500 annual return over the next 10 years, down from 13% the last decade. Jameson, can you walk us through why they're projecting this and what their thoughts are?
Yeah, so the S&P 500 this year is up over 20%.
Yeah.
In the last 10 years, it's an average of 13%. Historically, the S&P typically goes up 8% each year. That's kind of the typical forecast when you're thinking about how much money can you make in the stock market, you're thinking about 8%, but it's been well over that the last 10 years on average. There's been some down years, some up years, but on average it's 13%. But you always have to think about, as an investor, where things are going from here. And Goldman Sachs, my former company, did a bunch of analysis, and their economists came out and they said they think the next 10 years it's going to perform well under this 8% traditional mark, more like 3% a year, because a lot of those gains have been pulled forward into this decade. And it's definitely gotten a lot of attention in the markets and with money managers, because that would be a big deal.
Yeah.
And what happens if that is the case, and if we start seeing an underperformance there, is that assets start to shift out of the stock market into other assets. Could be more into the bond market, could be into other private assets like real estate, private equity. And that market, the private equity markets, have already grown a lot substantially over the last 10 years. But that's even while the stock market, the public markets, have done really well. So I would think that that would be a huge impact over the next 10 years for assets like ours that are outside of the market. If you can only get 3% in the S&P, you're going to be looking elsewhere.
Yeah, you're going somewhere else.
But it also sets the rate for what you can get other places. If the S&P is performing at 3%, outside of it, everyone else is dropping what they want to pay out just compared to the S&P, wouldn't you think?
I think there's going to be better options.
Yeah.
That's it. Like there's going to be better places to get a return. The nice thing with trading stocks is the liquidity that you get in the stock market. But if it's only getting 3%, you're definitely going to shift to more fixed income. Like right now, you can invest in 10-year treasuries and get over 4%. And that's basically a risk-free return. If you invest in U.S. debt, it's as risk-free as there is. So why would you invest in a stock that can go up and down and lose all its value if you're only getting it 3%?
This question might be maybe too high level or into the weeds, but what kind of analysis do you think they're doing to forecast this 3% over the next 10 years?
Yeah, you have to really dig into their report to get into the details there.
Yeah.
And the report isn't publicly available; it's only available to their investors. But it's their macroeconomic economists who did the report. So they're looking at large historical trends. They're looking at a lot of statistics, and where the thing that we do know is that things tend to level out over time. Yeah. And so the basis of their report is, look, if the stock market's really done 8%, and historically in the last 10 years it's done 13%, what's the likelihood? Is it going to continue at that 13? So that's kind of the layman's answer. And I think it makes sense.
Great. The next thing I want to dive into is an article by Newsweek, and it's titled A City Within a City. So plans are underway for a $7 billion development project billed as a city within a city in Phoenix, Arizona. Halo Vista, as it is now known, will surround a manufacturing complex developed by TSMC, which is already under construction. The CEO of the development company building out the community said, "It's not just a science park and not just a manufacturing district. It's a community. It's a city within a city." So this project will include 2,300 acres with more than 28 million square feet of mixed-use development capacity, which includes up to 8,960 residential units, as well as industrial, retail, and office spaces. So what do you guys think of Halo Vista and TSMC?
I think it's a great idea. I think one of the things they mentioned in the article is that it's not just for the manufacturing workers, but they really want everyone who's involved in this project at all levels inside this community interacting with each other. And I think that's such a great idea of cohesiveness, of creating your own, I mean city in a city, but being able to like create your own culture inside of it, set the bar and the standard for it.
It's similar to the GridWorks, where it's a community of real estate developers, real estate investors, real estate attorneys, but they're doing this on an even bigger scale, where they're going to have chip designers, engineering students, manufacturers, all co-locating in this one area. I think that's going to be really cool.
Yeah, and we all, maybe more than ever, we all want and need community and connection. I was having a conversation with a friend this week, and one of the things that came out is that when you move to a city like Phoenix, sometimes it's hard to find that community. It doesn't just happen on its own because there's so many people moving here at the same time. So everyone else feels like they have their own community, and so I'm not going to create my own. And there is a little bit of a difficulty when you move to Phoenix to do that. And things like this are what people really want, is being able to go feel part of a community. You're able to have shared interests with folks there. Still have folks from various backgrounds, which keeps it interesting. But I think it attracts a lot of people. And in a big area like this where you see a lot of growth, I think this is important. We've seen this in like Anthem, Sun City, which are these kind of cities that were built for 55 plus communities. People love living there because it's created around them. And it also just goes to show the kind of stuff that is happening in Arizona. The dollars behind a program like this you don't see in many areas of the country, but with the growth that we're seeing here in the chips sector, semiconductor sector, and all of that ecosystem that's been created, there's a lot of developers like these folks trying to get ahead of that. There's a lot of opportunity ahead of us in Arizona in the next 10 years.
Yeah. And another data point I want to highlight is, so the TSMC is anticipated to create 10,000 permanent jobs, and another 80,000 are expected to be created in the surrounding development, so the city within the city. If I was looking at buying a house right now, I'm looking somewhere off Carefree in the I-17, maybe up to Cave Creek.
I think the only risk is maybe it's pretty expensive already up there based on this, because this has been so far ahead.
Yeah, plans have been.
So I don't think you can go wrong up there, but it's not like you're going to get a great deal. Maybe 5 years ago, but that's the only thing, is it already baked in.
We just have so many people moving to that area, and they're going to be high wage jobs. They're going to need a place to live.
And then even north of that, Flagstaff isn't that far from there. An hour and a half. So an hour. Flagstaff might be a little far, but north of that, you have all these other towns on the way. I forget all the names of them, but you have Anthem and you have some other towns right on I-17.
Yeah.
I think you're going to see a lot of growth in that.
Prescott's a little bit closer.
Yeah, Prescott will definitely. Yeah. That's only a half hour from there.
We have a lot of variety in Phoenix. Between here and Flagstaff, there are so many options out there that can really accommodate any lifestyle.
Yeah, I think that's also, to your point, it's a trend. Arizona's, I feel like, a little bit behind the ball with. Like, you have Chicago, New York, you have mixed retail. You have retail and housing together. You'll have an office space with housing, or just an office and skyrise. Arizona's like building these little communities. Like we talked about pickleball and paddle, where it's you have the pickleball courts, but then you're going to have office spaces, then you're going to have a gym and retail centers. Same thing with the surf, Cannon Beach. Lifetime is doing a multifamily now, Lifetime Living, and they'll have a gym, and then Whole Foods would be a part of it. So it's a weird.
It's kind of the Arizona way to do it.
Yeah,
because they've tried a lot of mixed use stuff in Tempe, and it doesn't work that well here.
Yeah,
there's not the foot traffic that you get in the big cities, but these types of projects, it's the Arizona way to kind of create that same vibe, that same community.
The last thing I want to dive into is an article by Globe Street. Apartment REITs outperform national average on rent growth. So I know we're already starting to see some rent growth on our properties, but according to Tretfall report, looking back at the second quarter 11 major multifamily REITs that combined over 520,000 units saw 1.82% year-over-year increase in rent growth. This is something we talk about a lot, supply and demand. There's been a lot of supply of new units coming out of the market that kept competition for units was wide open. People could choose where they wanted to live, which kept rents flat. And now we're seeing rents start to trickle up as those units get absorbed. What are your guys' thoughts on this? Are we seeing this with our properties?
I think it really piggies back off of what we were just talking about is kind of different community and lifestyle choices. A lot of the new builds are not medium-sized apartment buildings. They're very big 500-plus unit buildings, which is great if you want a gym and all these other amenities with it. Our apartments are kind of this niche where it's obviously you're not in a house, but you're in a small little community. Yep. You're not dealing with 500 other people living in your space. You're dealing with 15, 20, a little group of people that you're all connected this way. So it's a different demographic, a different people that we're seeing come into our units. Obviously, the more units on the market, the more competitive we have to be with pricing in general. But I think ours is just kind of niche enough that we can continue to see our rents being pushed because people really like the fun 500-plus buildings for a few minutes, for a year or two, but ultimately it's not their lifetime goal to live in something like that.
Yeah, and rents have been flat for 2 years. Typically, they're going up 3 to 5%. So there's definitely a little bit of a catch-up that a lot of landlords and property owners are hoping to get over the next few years. And this data is a little always a couple of quarters late, but these REITs saw basically a 2% increase in rents. Yeah. Is a positive thing for multifamily owners, and we have seen that in our buildings too. Where this is referencing 526,000 units. That's a huge sample size. We're much smaller than that, but we also saw we've seen an uptick in rents, seen an uptick in occupancy, and as we've talked about in the past, we expect this to be a trend over the next couple years because these new buildings, they are not being planned. So there's going to be a shortage of housing, and that tends to move price up.
Great time to invest in MV REIT.